In real estate, it's easy to be impressed by large numbers, gross returns, property appreciation, and rental income projections. Yet, the truth behind every great deal lies not in what you make, but in what you keep. Industry research shows that nearly 30% of an investor's earnings can disappear through taxes and operational costs. That single number can transform what looked like a winning investment into a disappointing outcome. The difference between gross projections and after-tax performance defines whether your portfolio grows steadily or silently erodes. In this video, we'll explore how real estate tax advisory transforms basic accounting into a predictive, strategic framework, one that models results that truly hold up. Understanding the importance of after-tax modeling. Let us begin by addressing a reality many investors overlook. Traditional return models are designed around assumptions, but assumptions fail when tax timing, depreciation schedules, or entity structures change. After-tax modeling introduces precision. It is a financial roadmap that considers deductions, entity strategy, and timing of transactions to reveal your true investment performance. It moves you away from theoretical numbers and replaces them with reliable, defensible results. In essence, it transforms your tax strategy from a year-end task into a year-round advantage. From compliance to strategy, the role of a tax advisor. Most people associate tax professionals with filing returns, meeting deadlines, and checking boxes. That is tax preparation, an essential but limited part of financial management. Tax advisory, on the other hand, is strategic. It is forward-looking, analytical, and tailored to your investment goals. A real estate-focused tax advisor does not simply report your financial activity, they shape it. They evaluate entity selection to ensure liability protection and tax efficiency. They analyze your exit strategies early, preparing for depreciation, recapture, and capital gains long before a sale occurs. They synchronize financing choices, cost segregation opportunities, and 1031 exchange timelines to align with your broader investment objectives. This proactive approach is what separates ordinary compliance from a genuine strategic partnership. How after-tax modeling strengthens decision-making. Accurate modeling connects every stage of your real estate journey, from acquisition to refinancing, operations, and eventual exit. By integrating depreciation schedules, capital structure, and cash flow projections into a single model, investors gain a clear, data-driven picture of their actual financial position. Consider the power of cost segregation. A professionally executed study can reclassify building components and accelerate depreciation, generating significant deductions in the first year alone. For many investors, that can improve early cash flow and strengthen debt service coverage, benefits that extend far beyond compliance. In parallel, planning for 1031 exchanges ensures that capital gains are deferred efficiently, protecting liquidity and maintaining investment momentum. This is the difference between reactive accounting and strategic modeling, avoiding the common mistakes that erode returns. Without proper advice, many investors make avoidable mistakes that quietly drain their profits. The most frequent include neglecting eligible deductions, using inappropriate entity structures, and failing to plan for exit tax implications. For example, unclaimed travel expenses, underreported professional fees, or misclassified maintenance costs can collectively reduce your cash flow without notice. Likewise, grouping multiple properties under a single entity may simplify management in the short term, but exposes you to unnecessary liability and tax inefficiency. Another common oversight involves delayed exit planning. When depreciation, recapture, or capital gains are not addressed until after a sale, the tax impact can be significant and immediate. These errors rarely occur because investors are careless. They occur because they are focused on growth, not governance. Building confidence through tax advisory. Accurate financial modeling does more than protect your bottom line. It builds credibility. When your tax records, ledgers, and investor statements align precisely, every stakeholder gains trust in your operation. Lenders review fewer discrepancies, investors see consistent reporting, and audit inquiries are resolved with clarity and speed. This consistency is not accidental. It is the result of year-round coordination between accounting, advisory, and operational teams. In real estate, confidence is capital. Choosing the right real estate tax advisory partner. Selecting a qualified advisor is one of the most consequential decisions an investor can make. General practitioners may understand tax rules, but real estate requires a specialist who comprehends deal structures, lender requirements, and regional tax nuances. At GavTax Advisory Services, we bring that specialized insight. Our team integrates compliance, strategy, and modeling into one cohesive system designed to protect and enhance your investments. We assist clients with cost segregation studies, entity optimization, depreciation planning, and structured exit modeling, all built around accurate, audit-ready documentation. Each plan is customized to reflect the investor's unique objectives and risk profile. This is more than accounting. It is partnership through every financial stage of your portfolio's life cycle. Action plan for smarter after-tax results. As you look ahead to your next investment cycle, consider a few essential practices that can strengthen your position. First, review your entity structure to ensure it continues to serve both your operational and tax objectives. As your portfolio grows, the structure that once worked may now limit flexibility or increase exposure. Second, evaluate your depreciation and cost segregation opportunities annually. Even minor improvements or renovations can qualify for accelerated deductions under current tax provisions. Third, integrate after-tax modeling into your quarterly financial reviews. Waiting until year-end leaves little room for adjustment, while proactive reviews enable timely decisions and smoother cash flow. And finally, maintain meticulous documentation. Every deduction, allocation, and expense should be backed by clear evidence. These are not just compliance habits, they are growth strategies that sustain financial health across market cycles. At GavTax Advisory Services, our philosophy is simple: clarity creates confidence. We believe that accurate after-tax modeling is not a luxury. By integrating proactive advisory, structured forecasting, and precise compliance, we help clients across Houston and beyond transform tax obligations into long-term advantages. When every transaction is modeled accurately and every return aligns with your strategy, you move from uncertainty to control. If you are ready to strengthen your portfolio with true financial clarity, visit GavTax.com to schedule a personalized consultation. See you in the next video.